At a House Financial Services Committee hearing on Wednesday, Representative Bryan Steil questioned bank CEOs about inflation. The Wisconsin Republican blamed the Biden administration and Democrats for much of the inflation. Representative Steil also spoke about student loan forgiveness, calling it unfair and said, quote, "It does not address the underlying problem, which is the fact that we have skyrocketing college tuition costs. Under the president's plan, millions of federal student loan borrowers will be eligible for $10,000 in loan forgiveness."
Gentleman from Wisconsin, Mr. Steil, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. I want to bring us back to inflation. The American people are getting clobbered by higher costs every day. Before us, we have some of the best financial minds in the country, backed by a whole array of economists and experts that are looking at economic data. And as we see 40-year highs of inflation, 8.3%, people finding it harder and harder to buy the things that their family needs. I think a lot of this was avoidable, and it was the result of bad policy choices here in Washington. I'd love to get your flavor here as to what policies are driving inflation in our country so that we can help families who are struggling to get by. Mr. Diamond, if I can, the $1.9 trillion reconciliation bill has been described as inflationary, excessive spending. Do you believe that that $1.9 trillion bill at the start of the Biden administration played into inflation?
Yeah, I had mentioned earlier today that we had $6 trillion of spending over 2 years, 30% of the GDP, the largest it's been since the Great War, the World War II, and obviously that drives some of the inflation. We did have war in Ukraine and oil. There are other
not that there's not other factors at play. Absolutely,
we're going to have to deal with it.
But it piled on to that. I want to continue on. So inside that, then we have the Inflation Reduction Act that I think drives inflation. Then we saw the Biden administration unilaterally act on student loans. I'm not asking you to comment on the constitutionality of that. I think it's an illegal move. I'm not asking you to comment on the fairness of that. Is that an inflationary move by the Biden administration to shift the burden of student debt to all taxpayers?
Yes, it was badly done. I wish they had targeted the people who actually needed help, and they reformed the underwriting. So when the government took it over in 2012, they stopped underwriting. We got out of the business the second that happened, knowing it was going to be an unmitigated disaster. They still haven't fixed the underwriting, and they haven't fixed the cost of college. And so we basically put a Band-Aid on, spent a lot of money, and didn't fix the problem, which will now be ongoing. So please give it a fix.
And we would be well served to actually hold hearings here in Congress before hundreds of billions of dollars are being spent. I'm concerned about the fairness aspect. I think there's far better ways to do it. And I completely agree with you. It does not address the underlying problem, which is the fact that we have skyrocketing college tuition costs. Let me shift gears slightly and look at the impact of housing. And I know many of you have exited the housing sector due to a whole host of regulatory burdens put in place by the federal government, driving up the cost of Americans who are trying to get loans. But as we look at the impact that the higher interest rates are having on Americans, I think it's quite significant. The median home price in the state of Wisconsin is $271,000. Last year it was $250,000, an increase of $20,000. And the interest rate on the 30-year mortgage went from 2.86% and is now at 6%. So your monthly payment on the same home in Wisconsin, which is similar to across the country, increased from $828 a month to $1,302 a month. $500 a month more to buy the same house in Wisconsin at a period of time when families can't keep up with rising costs. And if I can, with you, Mr. Diamond, again, I'm aware that your bank, for many reasons, exited many areas in this space, but you got a lot of visibility into millions of Americans' financial picture. Sketch this out. How's this impacting your customers?
Well, currently the customers are actually doing okay. That inflation, high rates are going to eat away at their balance sheets, their health, eventually their jobs, and their spending money. And there are ways that I wish this group would work on that could reduce the cost of mortgages efficiently and effectively and make them more affordable today, in spite of rates going up.
So let's dive into that if I can pivot to you, Mr. Damchak, for a second. Over the last decade, Congress and regulators have implemented a complex bank capital and liquidity standard regime, and I would argue the spring of 2020 presented a stress test of all stress tests. And the banking system came through that and showed that it was adequately capitalized. How do you react to proposals to increase capital requirements, including proposals to take U.S. standards over and above international standards?
Yeah, we in the U.S., we call it gold plating, where we take whatever the international standards are and then add some to it because we want to be better. I think the stress tests have shown, in the real life stress tests, that the system is very well adequately capitalized and has a lot of liquidity. Thank you.
Thank you very much. Madam Chairwoman, I'll yield back.